hide your kids, lock the doors. You're listening to HR's most dangerous podcast. Chad Sowash and Joel Cheeseman are here to punch the recruiting industry right where it hurts. Complete with breaking news, brash opinion, and loads of snark. Buckle up, boys and girls. It's time for the Chad and Cheese Podcast.
Oh, yeah. It's J.J. McCarthy's favorite podcast, a.k.a. the Chad and Cheese Podcast. I'm your co-host, Joel Cheeseman, joined as always, the J.J. Watt to my J.J. Evans. Chad Sowash is in the house, and we're back again with the Bigfoot of data, the Loch Ness of knowledge, the Sasquatch of statistics. Toby Dayton, CEO at LinkUp, is back on HR's most dangerous podcast. Toby, how are you?
Good. How are you guys?
Good. I just realized we need some Sasquatch t-shirts, some Chad and Cheese, Toby, Data, Sasquatch t-shirts. That's
little known fact. Toby, in the early days of our show, I mentioned something about him. And I get a mysterious box in the mail of some decent Irish whiskey and a Sasquatch t-shirt. And it was like, love the show, signed Sasquatch. And that was it. It was this mysterious package. So Toby has a good sense of humor outside of the data and the big brain stuff that he drops on us every month.
The data, big brain stuff. What you been up to, Tobe?
Sports.
Not a lot.
Yeah.
Spring in Minnesota. Loving the Timberwolves. Undefeated in the playoffs. NFL draft. A lot of happy Minnesotans these days.
How do you feel about J.J. McCarthy? As two Buckeyes fans, Chad and I think the verdict's out on that dude. But what do you think about him?
Anything is better than Cousins. So very, very happy.
Oh, okay.
I was not a Kirk fan.
Was it because he just couldn't seal the deal? I mean, if he felt like a Rivers kind of of quarterback, right? So much talent, but just couldn't seal the deal.
And great stats and great,
great fantasy.
Winning seasons, playoffs, and then just never
playoffs.
Could never kind of get it done, and very pretty boring brand of football.
Playoffs.
Yeah.
And how about those? How are those Twins doing, Toby?
Pretty good. Hey, we were the hottest.
Hey, that's a personal question. Watch yourself.
I know.
Don't
be asking about Toby's Twins. Jesus.
I'm a Cleveland fan, so I do watch the Twins a little bit.
They,
baseball.
13 out of 14. We had a pretty good win streak. So things are good.
I think watching how bad the White Sox organization is one of the more entertaining things in baseball. What are they like? They're like 4-27 or something. I mean, they're so bad.
Well, we won 12 in a row, and it was because of 2 White Sox series. So,
wow.
That helps. That helps. Not a litmus test whatsoever.
Oh shit! Well, I tell you what. Let's get to the real show here, kids. Yeah, we're gonna be talking about data. Let's go ahead and share if it'll let me. There we go. Excellent. Okay, so from the Bureau of Labor Statistics, total non-farm payroll employment increased by 175,000 jobs in April. And the unemployment rate changed just a little at 3.9%, still under 4%. The U.S. BLS reported today, or actually a couple of days ago, job gains occurred in healthcare, in social assistance, and in the transportation and warehousing areas. From the household survey data, both the unemployment rate, as we'd said, is 3.9%, and the number of unemployed people at 6.5 million changed just a tad in April. The unemployment rate has remained in a narrow range of 3.7 to 3.9 since August of 2023. Now, this is from the New York Times. Perk Pineda, chief economist over at the Plastics Industry Association, said, quote, "I think it's part of the cycle. We can't continue robust growth indefinitely, considering the limits of our economy," end quote, meaning the growth we were experiencing was not sustainable. So talk a little bit about that, Toby. Talk about sustainability. Talk about, what was expected this time around.
Yeah, it was there were a couple of things that we can get to that were maybe a little bit eventful about it, but for the most part, it was kind of an uneventful jobs report of
now, is that a bad thing?
moderation. I mean,
is that a bad thing?
Yeah, not a bad thing at all. And
Okay.
and coming off the sort of really torrid growth in the first quarter, it did come in under consensus. I think was about 240. So it was a little bit underwhelmed, but made the markets very happy. And we'll talk a little bit sort of what's been driving the U.S. markets and global markets. It's just been sort of every data point has been moving things around. So there was a little bit of that in this report based on essentially the markets viewing this very favorably because it puts rate cuts back on the table. But other than that, it was a very much along those lines. It just there was no way that they were going to sustain the kind of growth, job growth forever. I mean, it's slowing down, and we put that maybe in there because we'll see. I'm a big fan of Austin Goolsbee, who is at the Chicago Fed, and he said 1 month report is no months, but 3 months is kind of equivalent of 1 month it's tough to put too much weight on 1 month, but it's definitely it was just moderation kind of across the board
but for the kids out there though, Toby, I want you to dig into something really quick. So can you help explain why the slow in jobs growth was good for the market? Was that specific to the prospect of cutting interest rates, or they're more kind of like more
that's
points
basically
there?
it. The longer that everything just the economy kind of exhaled. I mean, it was just sort of a catch your breath, and wages were in line. They sort of cooled off. Job growth cooled off. Labor demand it popped down a little bit. So it just everybody sort of things just normalized, if you will, and I think the markets reacted favorably to that because the longer that they were at that pace in Q1. Inflation's high, interest rates are going to stay high, and the markets react very unfavorably to that. So we'll get into that in the next part of the conversation, but it just was sort of a calming down in a lot of respects.
Hey, Toby, one of the things that stood out to me was we had talked about government jobs last month as being a major contributor to job growth. And this month, it really cooled down.
Yeah.
It had averaged the previous 12 months of 55,000, and this month was only 8,000 in terms of government jobs. And your thesis was that government had to kind of catch up with the market as a whole. So is your thesis now that health or government jobs have sort of caught up and that we should see a stabilizing there or more growth in the future?
Yeah, I think that's likely the story. I think you got to sort of string together and see. I mean, there is volatility month to month in the numbers and which sectors are going up and down, and so I think that longer story is going to play out. Whether that there are no more gains in government that are sort of outsized, maybe not, but generally speaking, I think that some of those last cycles of pushing on hiring are they're gonna be sort of temporary bursts up, and then they sort of moderate back down to a normal level. So I think that could very well be the case around government.
LinkUp is the leading provider of deep, accurate, and actionable labor market data. Unique in that we only get job listings from the one source of truth, the employer's website. By going to the source, we avoid all the duplicate and expired job listings that plague job boards and thereby other job data sets. Our data offers the clearest window into employers of all types and sizes throughout the world for an ever-growing number of use cases and applications.
One question about rates sort of decreasing. Part of my thesis is that the baby boomers are driving a lot of this, in that if you have a lot of cash, well, let's agree a lot of baby boomers do, and it's parked in 4.5%, 5% interest, they're just cashing money every month to go on trips, to go out to dinner, to do whatever, buy new whatever. If that interest rate that they're getting starts going down, they're going to spend less. Like, I feel like this could ramp up unemployment if baby boomers all of a sudden are getting 3% instead of 4.5%. What are your thoughts?
Yeah, that was actually, I mean, people have been scratching their head trying to figure out all, for the last 3 months, maybe even, but the last 6 months, why the high rates were not slowing down the economy the way that people expected when they started hiking back in spring of 22. One of the theories that came out earlier this year that people started talking about was exactly that, Joel, that higher people with high savings and were earning a decent amount of income on high rates. And that actually may have had a stimulative effect on the economy, these high rates. Certainly, again, whether that's sort of what was, how big you attribute things to that one dynamic, but there is no doubt that was a contributing factor, that it was moderating the negative, sort of cooling down effect of higher rates that would normally have, given the demographics and the high rate of savings. You're exactly right. And it is, that's one of the big debates going on are the rates right now, are they, essentially what effect are they having? What is that neutral rate where it's neither sort of hurting the economy or helping the economy?
Isn't it? I mean, isn't it just too much to have one cohort really have that much of the wealth in the population? Because I mean, the wealth distribution just is not where it should be. Because again, these individuals, which are they are a big cohort, but they're a dwindling cohort.
Yeah.
The one be under them, they just don't have the access to capital. They don't have, and that being said, they can't go buy shit, right? Yeah. So, and that's what drives the economy. So we've started to see wages go up, but it just doesn't seem like the wages on the middle to low side of the house are going up fast enough. How could that prospectively hurt the economy going down the road?
Well, yeah, that's one. That's one of the things that makes reading the tea leaves around the sort of backdrop of the economy really challenging at the moment.
Yeah.
Which is, our sort of guideline through that fog is the job market. That for us, and obviously we're biased, but that is a massive sort of guide to what's going on at a macro level and all the way down to individual companies and occupations, but certainly at a macro level. But on the surface, there are a lot of different narratives and storylines and sort of subplots around them. And Chad, you're exactly right. One of the things around inequality and sort of risk factors people have, there is some bifurcation going on where different at different income levels, different household net worth, different kinds of things, spending behavior, risk factors. I think generally speaking, the huge rise in wages really fueled from coming out of the pandemic for employers trying to get people back to work. That was a massive stimulative effect, obviously, and that's what, at a huge level, that was what has powered the economy, is consumer spending with higher wages and a lot of job growth. Mm-hmm. I think underneath that, some people are pointing to, there is now the case where people are looking at that not all of those boats have been lifted in the same way, and people. Yeah. Whether you're a homeowner or not, whether you're, what level of, income you've got, what your personal household situation is, there are some vast differences there, and that does introduce some risk factors in terms of what is going to happen looking forward as things start to cool off. Are there some cliffs in front of us that we're not thinking about the right way? And I do think some of that is. There's a lot of, there are a lot of those sort of tripwires that are out there that are people, can put different weights on in terms of what they think is going to happen. But there's definitely there are some some landmines out there.
Yeah, I agree.
Yeah. Can you talk to the Jesse Rogers quote? It has never been truer that the Fed is the world's central bank. Talk a little bit about that.
Yeah, that's, and again, being in the job market data business, obviously we're super biased in terms of the prominence and weight and value of accurate real-time data around the job market and specifically in our case, labor demand. But it really, one of the things that has been unbelievably fascinating to watch in the sort of pandemic era is the centrality of the U.S. job market, and it's really been the case sort of coming out of that supply shock and the way that the U.S. government really outperformed every economy around the world, and the rates that have been elevated and sustained at high levels. And this year in particular has been the prominence of the U.S. job market in driving effectively global markets, and you can we can walk through and sort of connect those dots. But one of those dots is that the Fed is the U.S. is the biggest economy. The U.S. markets are the dominant markets. The dollar is the dominant currency. So everything the Fed does has just got massive weight from a global backdrop standpoint. And this year has been just a textbook case in how significant the U.S. is to the global markets. And in sort of a highly summarized fashion, the markets, the U.S. markets were banking on 6 to 7 rate cuts this year, and the markets were going bonkers over that prospect of rates finally coming down and inflation coming under control in their view, and that the Fed was going to finally start cutting. And that turned out, given the strong job growth in the first quarter, the Fed, inflation just kind of got stuck in higher than where the Fed was targeting it. And slowly over the course of the first quarter, the expectations went from 6 to 7 cuts down to 3. Then it was 1 or 2, then none in the year, no rate cuts at all. And that sent, in the last 30 days, the volatility around the markets, currencies, bonds, treasuries, the ripple effect has been unbelievable to watch sort of what has happened. And again, it all comes back in a lot of ways. And again, there are a lot of factors there, but one of the predominant drivers of what the Fed is doing is the U.S. job market. And so it's been a really fascinating thing to watch, the effect of the job market on global markets.
Toby, there's been some pundits talking about a weakening dollar with higher or decreasing rates. How will that impact in your not necessarily your data, but the European market and job market, which has really been struggling really since the pandemic? Should we be expecting a little bit of a European turnaround with a weakening dollar and profits of the euro, et cetera?
The dollar's been super strong because of the higher for longer, and the dollar has stayed, been very strong. I think that, and I'm going to very quickly get out of my depth in terms of talking about going too far astray outside of the job market.
Sure.
So I'll put a huge asterisk next to a lot of this. But I think generally speaking, yes, the U.S. economy has outperformed every other developed economy in its recovery. But I think there is generally the global backdrop is that is pretty strong throughout, and Europe has got some issues, and they had some different dynamics going on. But generally speaking, I think overall the global economy is in quite solid shape again.
Yeah, and it even looks like China in terms of foreign visitors and people coming to tour China is improving as well, which is obviously a good thing economically.
Yeah, I mean, it just depends on sort of which, different sectors, different, whether it's tourism and people going abroad and traveling, exports and imports. It just depends on sort of where individual businesses are. And I think that for us is where sort of getting underneath the hood a little bit and looking at specific sectors, looking at even individual companies going forward as things do start to moderate and calm down. The economy is generally, it is moderating. There is no doubt. The question is sort of where, as the water sort of recede, what is left underneath, and there are going to be some things where, again, I think that bifurcation is going to continue to grow and impact different sectors and different industries and companies in different ways.
Yeah. Toby, let's talk about the error factor that's happening here, because we've seen a lot of readjustments, right, from month to month. And we've also talked on the show that, the way that you guys you gather data is much different than obviously many other organizations that are out there, including the federal government. So can we talk about the tracking the errors and then taking a look at the adjustments? And really, and again, I know we're all biased here because we're all in this space, and we understand the jobs, especially technology, can be more in real time than waiting for household surveys and shit like that, right? So can you talk about kind of like the tracking the errors, and then how you believe we should actually evolve, or at least the federal government should evolve in tracking this data?
Yeah. So there, I'll touch on a little bit this sort of. So what we do is we're indexing job openings data directly from employer websites every day. So we go out and collect millions and millions of job openings directly from employer websites for public companies, private, government, nonprofits, employers of all sizes, all industries, all over the world. So it is essentially the most accurate real-time data you can get into to labor demand. And we use that then, given the predictive nature and sort of forward bias in our data. A job opening on a company's website is the best signal of that company's intent to fill that opening with a hire somewhere in the future. Typically, it averages about 45 days in the future over a long haul. That we've used our data to then forecast non-farm payrolls, because there is very strong correlation there. So that is the basis of our forecasting, which is just sort of one tiny little sliver of what we do with our data. But that we've had a very good track record in forecasting job growth, and through this run of the last couple of years has been much higher than consensus in terms of what economists have predicted. ADP, very similar to sort of consensus, maybe slightly above. I think the other interesting thing to your point is that the revisions have grown considerably, and that there is, coming out of the pandemic, the survey-based data coming from the government has really deteriorated in quality. The revisions are higher, the reliability is less, survey response rates are just have dropped precipitously in COVID. Actually, Mark Zandi was on Bloomberg this morning talking about survey response rates, and he was asked about sort of what that means, and he basically said flat out, that's why alternative data is so valuable now, because surveys, nobody's responding to surveys anymore, period.
Duh.
I think the JOLTS survey response rate is about 30%. So it's definitely, there's still value in that data, but it is becoming, it's definitely coming into question sort of how valuable that data is.
We need better terminology than alternative data, because alternative facts. The last thing you want is Kelly Conway talking about alternative data. Okay, so we're gonna have to get that into marketing and polish that up a little bit for you, Toby.
All right, Toby. Let's get a quick prediction from you before we close this out.
So our jobs data did come down a little bit in April. So we would say that May is going to come down a little bit, but it's a little bit preliminary. We we'll look for a complete month of May data, but we continue to see a moderating job market. Good, consistent, solid economic backdrop for sure. We don't see anything upsetting that. Going back to the previous slide. We are right now, the job market in our view is perfectly balanced. And that means that there's just going to be good, solid, steady job growth, nothing too super high or low. And
amen.
Goldilocks is...
it'll take some outside factor to knock that off its course. And there's plenty of things to point to. But for now, we're in a very good spot in a perfectly balanced job market, very perfectly balanced.
Goldilocks is not just in the house. She's in a lazy boy sipping a Perrier. Toby, for our listeners that want to know more about LinkUp, where do you send them?
LinkUp.com is the best place to go. Find out anything you need to know about the job market and our data solutions.
Another one in the can. Toby, we'll talk to you again next month.
Awesome.
We out.
We out.
Thank you for listening to, what's it called? The podcast. The chat. The cheese. Brilliant. They talk about recruiting. They talk about technology. But most of all, they talk about nothing. Just a lot of shout-outs of people you don't even know. And yet you're listening. It's incredible. And not one word about cheese. Not one. Cheddar. Blue. Nacho. Pepper jack. Swiss. There's so many cheeses and not one word. So weird. Anywho, be sure to subscribe today on iTunes, Spotify, Google Play, or wherever you listen to your podcasts. That way you won't miss an episode. And while you're at it, visit www.chadcheese.com. Just don't expect to find any recipes for grilled cheese. It's so weird. We out!